Hey YouTube, and welcome back to Love for Crypto. So today's video is, let's call it devil's advocate, on a video that DM Logic has recently posted. I'd just like to say it's good to hear his voice again, making videos. Again, this video that I'm making today is no way a diss or anything to be disrespectful in that regards. I see it more as, there's a fair few personalities within the XRP space and within the community. Everyone's each entitled to their own opinion, and this is nothing more than sort of a response video to DM Logics, which I think he did extremely well explaining, to be honest with you. It is a sort of a principle that is hard to that is hard to grasp. Is probably the fair way of putting it for many people out there. It did take quite a long time for myself really to really grasp my head around a good way of evaluating XRP rather than just using the value times supply, because there's many other varying factors, and there is not to a degree an exact science, but I always believe that value can be gauged from volume in its simplistic form. So, of course, obviously, DM Logic's explaining Galvatron's approach to slow value adoption. And he said he believed to see Ripple anywhere from $20 to $30 in the next year or two. But that is based around retail investment only. Okay, that's no money coming in from institutions. In that regards, that's what his entire video concept was around. Why would banks, why would financial institutions invest money into an ecosystem when they don't have to, basically because of the fact, we've got the retail investment at the moment. If we get some good news and banks start using XRP, you'd expect to rush into the asset itself. Little things with like the SEC decision that could obviously create a sort of a spark within itself. There's various different factors, contributions that can actually increase the value of an XRP without the investment of these financial institutions. For example, SBI, I always use SBI as a good example, which obviously I'm going to continue to discuss in the video, because as I've always said, I do believe they are integral. Again, they've got a 10% hold in Ripple, the company. I think they've got around 7 to 8 billion XRP themselves. So they've got every interest in making this ecosystem work, of course, from an investment point of standpoint. So obviously the honest question, which is up in the air, why would banks put billions into an ecosystem when they don't have to? And I think it's a great discussion. People who do listen to my podcast, I find it really difficult, just continuously getting a video out every day to speak about something, whether it's a news article or, latest development in something. And then it's not to knock anybody who does that. Digital asset investor does that really, really well. And, he's probably throwing out 3-4 a day in 2 or 3 days, sorry. And he does extremely well, and they enjoy watching his videos, in all honesty. So, again, this isn't, a mock or a diss to anybody out there at all, this video. A lot of people take me the wrong way and think I'm being aggressive, but maybe it's just where I'm from. I'm not intending to be aggressive. But anyway, moving forwards again with this SBI scenario, and obviously in regards of the XRP, value over time. So, basically 20 to 30 years and 1 to 2 years, I can fully appreciate that price. In fact, I think it's actually very fair to say that it's a very realistic price to a degree. In 2 years' time, if you think about the run we had prior to 2018, running up into, I think probably peaked at around the 5th of January or so, XRP is at $3.80 alone off retail investment. So, to go up to these figures is completely expected. It's probably the least to say in that regard. So 20 to 30 years off retail money alone, I think he's bang on the mark with that one there. I think that's very, very realistic, conservative, well-grounded, not hyped up to a degree. And if it does get to those figures, that's my first cash out triggered, 10% of my holdings, which I'm willing to sell. So, I'd love it to be that price. I've accumulated well over the year, over the previous year. And, for me, those prices are life-changing on their own. But in that regards, this is a video, a bias against the fact that financial institutions are not going to invest into this ecosystem, because again, they don't need to. If they wait for 2 years, pushing on to 3, then of course, obviously, if you've got a value XRP at $20 to $30, it's more liquid. We can have those high value payments pushing through the ledger, which, you know, today's impossible. It just wouldn't make sense. It would actually, in theory, be cheaper to use Swift because of the basis point move, because of the narrow thickness in the order books, basically. So, you know, you spread, you're gonna have, I'm not too sure what the basis point move would be, but listen, it'd be cost effective to use Swift, is the least to say. So we need to get this ecosystem to prosper, to grow, to keep adding liquidity, and we need capital for it. That this is what, you know, the big argument. People can argue that, you know, the utility alone will bring the value in, but then on the other side of the fence, you've got people saying, well, you can't push through this volume of payments with the value of XRP being. So, you know, the price needs to move there first, then the volume can come in and support the price. So I think we can all agree in one thing. You know, let's just say XRP does get to $20, $30. The theory goes that at this price, it's $20 to $30. Now we can have a stream, you know, let's just call it billions in volume, pushing through the ledger now, daily transactions, doing decent sized value payments. Now this is a way XRP can actually put a support, if you want to call it that, maybe in the value. So obviously, if as it's $20, $30, whatever value we say it's going to be, if we can pass this volume through at this point, XRP can then support that value. If we wish to have a major sell-off, for example, those sell orders would just be picked up as a transaction from XRP itself. It doesn't care how much the value is, what it's worth. It just wants to get from A to B, and it will buy it. So it can relieve selling pressure, is a good way of putting it. Once XRP's live and it's you know, putting this constant flow payments through, there's no evidence to suggest that that is the case at the moment, because it isn't. But, you know, if XRP is $20 and we can get a steady flow of guaranteed payment running through XRP, obviously utilising XRP, then it can sustain that value. So the argument in question in it is again, you know, why would banks want to do it? And again, this is in my opinion. I appreciate the fact that DM logically very stated that clear. This was in his opinion, and now this is in mine. Again, it's not an attack. It's just two different, you know, personalities, if you want to call it. They were promoting XRP or talking about it, whatever the fuck you want to call it. You know what I mean. My opinion really is, and it goes like this. If people do follow my podcast, they will realise that we are in an economic shitstorm. Is the fairest way of putting it. Now, a lot of people do focus on America and their markets, the US markets, bond markets. And for myself, I watch it very closely, but I also do watch other parts of the world as well. And as an example, there was some very, very mysterious occurrences in the Forex market, some slight flash crashes. I will post, obviously, the charts below, but, you know, your main fiat pairings, your euro, your pound, you know, the dollar, the Canadian dollar, the Aussie dollar, stuff like this. They all took a massive dive. And now obviously they've recorrected. You know, we've algo bots that, you know, are just going to be buying up and recorrecting the market that we know is out there. Basically, what we're seeing here to a degree is, and it's all about Nostro reconciliation. Now, what I am talking about here, specifically here, is pure speculation at my point. But it does also, you know, with what I am saying, you understand why it is relevant. Now, all these fiat pairings, I think I asked in the Telegram group, and I think we come up with an average of maybe anywhere between $2 to maybe $6 trillion in dollars value was returned back into Japanese yen on this specific day. Again, obviously, these are all the charts laid right now in front of you, and you can see that massive spike that's come down, that sort of flash crash to a degree. It was an 800-point basis move, and it's an abnormal move is what I'm saying. You know, the last time that we had that was in 2016, which this chart is now showing again as an equivalent drop. 2016, and that was due down to Brexit. Now, there's a lot of reason for that to have happened during that time. There was a lot of market uncertainty, and just the whole aspect around Brexit did created a shock in the financial markets, and it's known, and as you can see in the chart here. So again, although this is speculation, I mean, just hear me out here, and I'd love to say it's ironic, but again, I'm not trying to have this as a pick at DM. In fact, in all honesty, I'd really appreciate if he come out and did a response video to this one, because he has got a great point, and I fully believe in what he's saying. You know, retail money will push it to those values, and I do believe that. But I'm just trying to emphasise the point that there is going to be a lot more urgency and pressure put on these financial institutions. I believe that most people do seem to grasp or realise at this point. Again now, so obviously this is on DM Logic's Twitter himself, and this is on DM Logic's account. And basically what's posted there, obviously I'll increase this for you. It says, within Ripple's consensus ledger, XRP is used to improve currency liquidity and lower the capital cost of cross-border payments. Instead of holding local currency Nostro accounts around the world, banks can use Ripple's network to consolidate their liquidity for global payments into one XRP account held on their own balance sheet. The singular XRP pool then allows respondent banks to allocate less total capital to service the same volume of international payments. As a result, respondent banks that use Ripple with XRP as a bridge asset can save up to 42% on cost and up to 60% as market adoption of XRP grows. Now, obviously, this is what I'm saying, and it is repetitive stuff, but people need to hear it to emphasise the point that I'm making. Banks are saving 42% on X-current, okay, but that's obviously still keeping that Nostro conciliation wherever they're going to need it for whatever currency they're looking to move value into. Now, obviously, further on top of that, they can actually bring down their total cost for transferring value for down 60%. It's saying here on this, but not on top of that. Also, that's now allowing that financial institution to return that capital back into its native currency because it no longer needs to serve the purpose of holding it into Nostro accounts around the world to allow money to move. Because once they come onto the Ripple's network, then obviously, and this it makes me laugh. People laugh because you say, "Oh, it's only X-current," but it's not only just X-current, is it? It's removing a financial institution from the traditional rails of what we know as today's SWIFT, and they've actually put it onto a distributed ledger technology. Now, the banks and the financial institutions may not well be using XRP at this point, but they are using distributed ledger technology, and it's a massive step and advancement for these banks, and we've got hundreds of them that have used this, and they are using it now, and they are live, and they're saving money, and they're moving value around the world. So obviously the stepping gear is obviously using a digital asset to actually move this value. Now let's take our Nostro back and actually make this this digital asset can do the settlement for us to a degree. Well, not to a degree, that's what it will be doing. So obviously you sat there now, it's 2019, we have a look back at the financial institutions of 2018, and as I'm saying this, I'm going to roll a few, because I've done this recorded on my phone and as a voice note, but I'm going to show you some financial institutions now, and this is 2018, and we're talking about Deutsche Bank nearly being down 40% on the year. 40% of value gone. Now, I'm not trying to say that the bank can't operate at this value. I'm not saying that whatsoever, but we are going to be getting to a point where banks are going to be being squeezed for liquidity. And this is going to happen this year. It really is going to happen this year. If you look at China's currency, it was down 20% on the US dollar last year as a currency devaluation. And we're going to see as the dollar, we've just listened to the Fed come out, that Powell sat there with the previous two Fed chairmen. And the markets have absolutely bought it. On Friday, I think we were seeing, maybe up at 800 points at one point for the Dow Jones. The Fed have come out saying they're going to ease, tightening in if they need to. They're very adjustable. And the markets are sucking it in. So, the rush back into the bonds are going back up. But we need to remember it's not just about the US. We're talking about, macroeconomics here. At the end of the day, the strength of the dollar may continue, but it's going to hindrance these emerging markets. And when we talk about Japan, we're talking about a country that has debt to GDP ratios like 300%. It's got the cheapest currency in the world. It's had periods of negative interest rates. They may well actually be in negative interest rates. Now, I'll check at the time, obviously, but, they could be, they've not been, but they have been. And when you look at Japan's currency, it's weak. Something needs to change. They've got a lot of, debt to GDP ratios, absolutely shocking. And currency devaluations at this point are not going to be good for the Bank of Japan. And obviously, we know the times with Ripple. We're talking 65%, 80% of the entire nation of Japan, fully on Ripple network. SBI, we know they've got a lot of serious stuff planned, especially now we've got the R3 and the quarter settlement system, which is going to be using XRP even further. And we are waiting for them FSA regulations to come from Japan to enable this to fully start. You know, last year there was an exchange hack, you know, where cryptos was lost and stolen. The exchange had to get a loan from the bank to reimburse the crypto that was lost. And, you know, the FSA didn't like it. They stepped in. You know, we need to get your house in order. And it's pushed things back. You know, these things aren't just going to roll out perfectly every single time that we plan to do something. We're going to get pushed back after pushback after pushback. And there's nothing to say that SBI won't push back again, by the way, when they say this. But, you know, we have supposedly got a launch date for March 2019, which isn't far away, to be very fair. No, obviously, as I spoke to at the start, SBI way invested into Ripple. They've actually got a 10 to 11% share of the actual company itself, Ripple, whilst holding at least 7 to 8 billion in XRP assets as well alongside that deal. So as you can see, SBI have got every interest in making this work. And, you know, when we think about SBI and you think about Japan, and a lot of people don't know who we are, you know, Japan account for 1/5 of global forex trade. I mean, that's the main talking point to talk away from that realistically. 1/5, you know, 20%. And on average, you know, it could shift between 4, 5 to 6 trillion daily during forex market swaps. So when you think about that realistically, if you were, you know, let's just call it 5 trillion, just for sake of argument for the maths, then Japan actually account for 1 trillion a day in daily forex transactions. Now, SBI actually contribute for 80% of that volume themselves. It's a network of banks, SBI. You know, it's not just one bank, but, you know, when we're talking about SBI network, SBI Ripple Asia, a consortium of banks all working together for the same common goal. And also on top of that, the three major forex brokers for Japan, where the money comes in and out, you know, they're all... SBI have got a stake in all those companies, 20-30%. So when you look at Japan as a whole, you know, currency is weak, pathetic. Currency devaluations are going to be no good for Japan. You've got an entire nation, and, you know, let's call it 80% of the banks on Ripple net. I think that figure is actually quite accurate, to be fair, in all honesty. And then you've got SBI themselves, the company, a financial institution, SBI Holdings. And they've actually got an acquired holding of Ripple themselves with XRP. So, you know, this nation itself, not just a company, the nation itself, ideally, could roll out really whenever. You know, if we get FSA regulations and SBI is allowed to run out and use these products, and then we have market takers and makers, which I believe SBI will be responsible for on the initial launch, then we could see some stuff happening a lot sooner than what people do realise. Because, again, you know, just as a business investment opportunity, there's no urgency to it. Yeah, let's let it roll out. You know, let's let the retail push up the market price, and we'll just keep hiring up the payments as we go, and we can, you know, support the value of the price there. But on the other hand, again, like I'm talking about, we're talking about financial institutions worldwide melting to the ground. And if you're looking at the charts that I'm showing you here, and this is global, this isn't just Japan. I'm just using Japan as an example here. With SBI, because I've always said I do believe SBI are critical and essential to get Ripple, you know, at those price valuations that I stated that I thought would hit at the end of the year, which was around $10. And when SBI launch eventually, it'd be nice to see exactly what happens to the volume for everybody, because I might be wrong, I might be right. DM and Galgatron might be right, I might be wrong. Again, it's just an opinion, but I think it's essential to listen to the stuff that I'm going to be talking about, because, you know, we're talking about an economic downturn, we're talking about markets becoming illiquid, we're talking about financial institutions that have already shredded mass valuations off their actual net worth of the company. That was during 2018. We've got another full year of that. Although, you know, the Fed have come out now to reinstill confidence into the markets, US-wise. You know, we're still talking about other markets worldwide. And I do believe if we do have that suppression, the bear market continuing, which I do see, I see that this year. I actually see, you know, crisis starting to unfold this year personally, myself, just with some certain indications that I found. But the point that I'm making is financial institutions, the finance sector worldwide is in a bad way. I mean, Deutsche Bank down 40%, one of the world's biggest banks in the world. You know, if Deutsche go, it's going to have a big ripple effect. I'm not trying to say they're going to go, because I think they've got an option, personal myself. And that option for me is simply just, look, listen, we're in market turmoil. We've been in a bear market. We've reached the top in 2018. We're coming down. We shredded 40% value. The world economic overlook itself isn't looking too promising at the moment. We've got trade wars. We've got Brexit on the horizon. And, you know, we've got emerging market currencies which are devaluing by the day against the dollar. Again, as the dollar strengthens, the emerging market currencies will be devaluing as we speak. And it is uncontrollable to a degree at this point. You know, they've had to roll out the Fed, they've had to roll out Trump, and they've had to do it to turn the market, and it's worked. You know, they call it a program for a reason. But the markets will fail this year, and you will see it, and you will see financial institutions struggling. And what the banks, what are they about? They're about profit, they're about making money, they're about saving money, they're about minimising losses and costs. Now, obviously, we've been speaking about SBI. Let's say the FSA come out with the approval that SBI need, Japan need, for the country to now be able to operate with digital assets, and they get all the green light from the regulation from the country. Then all of a sudden, what you're going to start seeing is you're going to start seeing SBI and a large percentage of banks. You know, it's a consortium of 65 plus banks, all linked into the network, ready to start settling with XRP. Now, what I've shown before, and I'll put another few snippets up again, was like a major flash crash in the Japanese currency. Again, this is a theory. I might be wrong, but it's trillions of dollars in value that has moved for no reason, and the last time that it did was an indication from Brexit. Now, again, if you go back to that tweet, and if you ever think about the Nostro reconciliation, when they start using XRP, they can start obtaining their Nostro capital back. Now, considering that all these currencies were pegged against Japan when this happened, could this not have been a repositioning on Nostro accounts? Could this not have been MUFG? And bear in mind, you know, Mitsubishi, fourth largest bank in the world, trillions of dollars of assets under management. They've made their own stable coin, MUFG, which now can be pegged digitalized into the XRP ecosystem. Again, it's a theory. But again, why are Japan's API keys missing from the Ripple topology, from Ripple charts, XRP charts? You know, Japan API key, it's not linked to it. It's dark. It's radio silent. And listen, we know how deep and how heavily involved Japan are with Ripple, and people just forget about SBI because they didn't launch in June, and it's this, and they're just brushing it to the side. But, you know, we're talking about a consortium of banks, basically, with the lion's share of Japanese, you know, transactions and settlements. That's interbank settlements, you know, Forex, again, 20% of total Forex transactions. You know, that's in the trillions. You know, and SBI are accountable for 80% of that. You know, it's a lot of money, and it's a lot of, you know, billions. And it all comes back to the point was, you know, which come first, the chicken or the egg? That is the scenario that we are in. And I do believe that if it is on the grand scale of what I think the mainstream media will help get retail money pumped into the system, because that's just what they do, and it's a way where the banks don't need to put as much in. But, you know, as banks, I'm not too sure exactly what it would be for Japan. It would be nice to find out, you know, what banks like MUFG and all these other banks around the world actually have to hold in order to use SWIFT, and the way that clunky money moves today. You know, it could be $1 trillion. That SBI Holdings Group and the partnership of the banks, who've all come together to form this Ripple SBI Asia. It could well be that they may have $1 trillion. They may even have 500 billion. They may have more than that. But the point of what I'm saying is, once the FSA give the approval and the green light to use this network, and they are fully able to do so, they may be currently taking back their Nostro capital. Now, I mean, there's no explanation for this glitch, if you want to call it, in the Japanese peg. There's no explanation for it. Last time was Brexit. There's no reason for it. No fundamental like jitters that would have promoted it anyway. Again, this is just me, you know, my theory on it. There's nothing concrete to it. But there is concrete to the partnerships with SBI. There is concrete proof too. The current crisis that we're in at the moment, it's a bear market worldwide now, and financial institutions are getting hit hard, as it's shown with Deutsche Bank, and it will continue to do so. And financial institutions will be squeezed. And if they have an opportunity to pull back their Nostro capital and just choose to settle differently with the FSA approval, then they can take the money back out of the old system. the financial institution and banks can keep all this Nostro money that has been tied up for years and years and decades, and they could just put a small fraction into XRP. You know, if the banks are taking back, you know, $1 trillion, then 1/20th of that could just be injected into XRP. And it's 50 billion. It's quite a lot of money. And that's just like using 1/20th off that Nostro capital. Now, bear in mind, these financial institutions that have been bleeding all year, that are desperate for some sort of capital, have now got 9/20ths of that Nostro capital back to use at their disposal to go and buy their own stock back on the stocks to reverse the market while its shares are plummeting. You know, it's just a little bit of brainstorming is all I'm saying. A lot of people are so focused around slow growth and adoption, and I am a supporter of that movement because it prevents hype from getting out of hand to a degree. But on another note, we need to factor in actual factualities at the moment. Are we in a bear market worldwide? Yes. Is there a potential of a major bubble popping? Yes. Financial institutions and banks being levered to the ground as shown on the charts, historic data. Yes, they're being levered. Would you as a bank, financial institution, bear in mind fully integrated into Ripple software, ready to start using XRP, which I strongly do believe SBI and some of those banks are definitely already integrated to some sort of extent, would they start settling payments if the law allowed them to, in order to save money on what they're paying anyway? It's 60% saving on what they're currently paying regardless, to also then get the Nostro capital back, to then obviously reserve the value on the market that's reflecting that business or bank, you know, with a stock buyback, because that's what they do. They want the value to remain of the company, and they can pump billions into its valuation, all just to settle transactions in a different way, not to change money, not to destroy fiat, but just to bridge payments together. It's getting a little bit long-winded, this, so I'm going to cut the video short of this. I hope I've covered it well. I hope I've done it in a way where I've not been disrespectful to DM. You know, I appreciate his input, and it's nice to listen to people like that, because it's not all about hype, this, and it is going to take time. But all I'm trying to get out there and to the people is just to understand that we're in an economic shitstorm. No, it's not going well, and it's not looking good. And it won't be looking good for these financial institutions and banks when the stocks do continue to keep sliding, which they are doing. They're being squeezed. And there's talks of the biggest financial crisis ever being on the doorstep, you know, whether it comes this year or next year, even the year after that, which I don't think it will. I think it'll just get out of this year if it does. We're talking about a big, major debt bubble worldwide popping. Major debt bubble popping worldwide. And, you know, if we've got trillions of capitals, why won't these financial institutions change the way that they settle payments and move on to a new digital system that is built for the future, that is built for faster payments, that is truly a global RTGS system for the world to operate on? You know, why won't they do this? If they've got the option to do so, will they not do so? But again, obviously, it's all about how are they going to do it? Where are they going to get the investment from? And all my theory is suggesting is, if we're in an economic meltdown and a crisis, there's trillions locked around the world, people can take the trillions back to the respective owners. They can obviously, you know, reverse their bank stocks if they plummet in. They can reinvest it into the company. You know, I reckon stock buybacks will probably be on the top of the agenda during a period like that. To a degree, a form of easing. You know, it's unlocking trillions to help aid an economic downfall, and trillions of dollars will be really essential at this point in life, and we will come across it, and I do think it will happen. And I think the old way that money moved will unlock the trillions needed to pump some new fresh capital into the market, capital that has been locked just for changing the way that payments are settled. Whether the central banks take control of the settlement, I don't know. Again, it's all speculation, but I do believe that XRP is specifically designed for this upcoming crisis. I really do. I think there's going to be a massive US dollar liquidity crisis, and I think XRP is going to take some steam out the pot. I'm not going to say it's going to become the world reserve currency overnight, but, you know, if you can get, you know, let's just talk about 5% of Swift payments going through XRP, You know, how much percentage of global payments will actually be passing through XRP at that point? It's a possibility it could happen. But, you know, as we've mentioned many times before, and you probably heard, Brad Garlinghous's prediction is this year is for banks to actually hold XRP on their balance sheets. That's a massive thing. And obviously, he'd like to expect dozens of banks using XRP as a settlement tool this year. Again, when you think about dozens of banks, you know, let's say 30 banks, plural dozens, 24, so let's call it 30 banks. You know, 30 banks all using XRP for intraday settlements. We could be talking 30, 40, 50 billion in payment volume. Anywhere up to 150 billion a day being settled through XRP. Again, it won't be able to do it without the liquidity, but there is a scenario where, you know, financial institutions will feel pressure in these markets, and if they can settle money differently, they can do it cheaper, they can do it faster, more cost effective, more efficient and more transparent, and it can also pull them out the shit as the stocks start plunging to the floor. Then I think you're going to see a lot of financial institutions worldwide actually wanting access to the Nostro. And I think that alone may be a domino effect on its own. And again, it's just interesting to see what we've seen in Japan. You know, that's trillions of dollars of value that's been moved in a flash crash. It's been covered by a lot of people. We covered it extensively in our Telegram group. And again, that's just a theory. But could that be Nostro reconciliation? Could that be the Japanese pulling back into Japanese yen? And, you know, potentially MUFG with their stable coin could now be minting MUFG coins that could now settle on the XRP network. Again, it's a theory, but, you know, we're going down that route. This is the tokenized economy that we're seeking, and I do believe we will roll out into. I think it was a good discussion. I enjoyed DM Logic's video. I hope he appreciates the fact, you know, I'm not doing this in a horrible way or anything. I just find it hard to make videos, and I believe that, you know, there's always two sides to a coin. You know, DM Logic's being more conservative, retail investment only over the next year or two, but still yielding maybe $20 to $30. I'd be extremely happy with that. I'd like to be proven wrong on my theory and still be extremely happy with that. But then on the flip side, from my point of view, you know, we've got an economic crisis that isn't going away. And we're only getting closer and closer and closer to what, in my eyes, is going to be the biggest financial crisis in history. We've got the yield curve just missed from inverting. Obviously, the Fed's come back in. I've got every faith in the Federal Reserve and Donald Trump to continue playing the masses into thinking everything's going to be okay. How long they can do it for, I'm not too sure. They've done a very good job for the past 10 years. But we are at a very critical point in life, and I do believe that, you know, these major financial institutions around the world, Google, Amazon, all sorts of other tech companies that are looking to move into the payment sector world. I do believe Ripple will be the choice of network, and I do believe alongside a financial crisis, when it's going to be absolutely essential for that Nostro reconciliation to go back to its respective ownership, so they can then obviously repump that capital back into the economy. It's not going to save the world, no, it's not going to change the world, but it will definitely help, and it may be the difference between survival for some of these banks. Again, that's my own opinion. But, you know, to that degree, if you're talking, you know, I'm not trying to say all the Nostro accounts are just going to fly into XRP in one swoop. I don't think it will happen that way. But I do think we will start seeing it. I think people who are committed to Ripple and XRP are going to take that leap of faith at some point. And was this the leap of faith with the Japan currency? With a lot of major pegs, was this now obviously bringing back Japanese yen back home and reconciliating it to reposition the Nostro account into maybe what we may see be released this year in March from SBI. You know, don't forget SBI. Everyone laughs at his blink of an eye moment. Will be the number one exchange overnight, and I do genuinely believe he's got good purpose to be saying these things. I'm not hopefully wishing that it does. I'm really not. You know, I'm employed. I've got a job. I've got financial stability. I've got invested into Ripple. I'm not over invested. I can continue with my life. It's not hindering my life. And it's not that, you know, I'm being desperate to try and find something that I think is going to make the price rocket. But I just like to put different points of view across. You know, maybe DM Logic might walk away from this and think, you know, yeah, it makes sense. It does make sense. I mean, realistically, it makes fucking crystal. Fucking, I can't get the words out, but it makes that much fucking sense. Because why wouldn't a bank or financial institution not use a service that's 60% cheaper, whilst obviously retaining back the Nostro capital they've got parked around banks in the world idle, so they can then re-go and invest that back into their company themselves, and drawing down a financial crisis? Would it be absolutely perfect if MUFG Bank could get 40-50 billion dollars out of Nostros that they've got parked around the world? Hazardous to a guess, considering they're the fourth largest bank in the world. I think that would be a very good business for MUFG. I think it'll pull them out of the shit, is a good way of putting it. Again, it's just a theory. But, if they're going to use this network, if they're going to use XRP, they're going to be taking back the Nostros, because there's no need for the two. And obviously all these banks are integrated with Swift GPI and Ripple Tech now on RippleNet. And when you actually think about the plays that Ripple have actually took off Swift, they contribute to 80% of Swift volume, the plays that are now integrated with RippleNet. And we could just be in this transition period now from traditional rails to future rails. And, this parks up money around the world. Let's use it for a good cause. We're going to see an economic downturn. I'm not trying to say it's going to save the world, but, when we're talking trillions of dollars parked around the world, I'd like to think it can make a difference in an economic crisis. So, yeah, again, anyway, I have waffled on for quite a long fucking time, to be honest. But I think it was definitely a good counter-argument, gentleman's argument against DM Logic with that one. And again, obviously, with Galgatron, she's a great person to have in this space. And yes, DM Logic, that is a she, not a he. I was quite shocked myself. Not shocked, but, I just believed it was a boy. But again, it's all about brainstorming these ideas. We're never going to know the full picture till it's too late. And they like they say, you never know a good investment until it's too late. So it's great having all these different, intelligent people around us. I'm not trying to say I'm intelligent, but, my theory has got fundamental backing, if you want to call it. I'm not just making this shit up. Everything I've said is the gospel truth, backed by evidence and documentation, apart from the points where I have said I am, putting it into a theory perspective. And I just think 2019 is going to be a very, very interesting year. No price predictions this year. I'm all about looking for volume and where volume is going to be coming from. And rather than thinking about, I wonder what the value of XRP will be at the end of the year, maybe try thinking, I wonder what volume it'll be pumping through the ledger by the end of the year. Because, volume correlates to price regardless anyway. But, rather than just chasing around the price, let's think about where we can get these billions of US dollar equivalent volume passing through XRP in a daily 24-hour period. I think that's how people should be looking at it now. If you've been investing in it for a year, I'd like to think you can be patient and hold hands and hold your coins. But yeah, I'm going to leave it at that one, guys. See you later.